Hello everyone. Welcome to the Stock Minds web channel. CorMedix, NASDAQ, CRMD has captured attention this quarter with one of the most dramatic turnarounds in the biotech sector. From near-zero sales to blockbuster growth, the company's Q2 2025 results confirm both its rapid commercial traction and its underappreciated valuation. In this video, we will dive into CorMedix's recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About CorMedix. Founded in 2006, CorMedix is a commercial-stage biopharmaceutical company focused on developing treatments to prevent and treat life-threatening infections, especially for patients undergoing dialysis. Its flagship product, DefenCath, a taurolidine heparin combination, received FDA approval in November 2023 and launched commercially in April for inpatient and July 2024 for outpatient. The company's primary business revolves around expanding DefenCath adoption in dialysis settings and building a sustainable portfolio through strategic acquisitions. CorMedix financial performance. In Q2 2025, CorMedix delivered an exceptional financial performance, showcasing significant growth across all key metrics. The company reported revenue of $39.74 million, a dramatic surge compared to $0.81 million in Q2 2024, driven primarily by the strong adoption of DefenCath. Earnings per share, EPS for the quarter came in at 28 cents, marking a remarkable turnaround from a loss of -25 in the same period last year, representing an impressive 212% year-over-year growth. On a trailing 12-month TTM basis, revenue reached $121.48 million, a massive increase from $0.81 million in Q2 2024, while EPS improved to 79 cents compared to a 93 cents loss a year earlier, reflecting a 184.95% improvement. Additionally, free cash flow per share, TTM, stood at 47 cents, up 152.81% from -89 cents in the previous year, highlighting the company's growing cash generation capabilities. CorMedix also boasts strong profitability, with a gross profit margin of 95.62%, a net profit margin of 42.11%, and a free cash flow margin of 25.03%, alongside efficient returns, achieving a return on assets of 19.86% and a return on equity of 38.35%. Notably, the company operates with no debt, providing financial flexibility to fund future growth. Over the past 5 years, CorMedix has transformed from a clinical-stage biotech company into a commercial one. It started marketing its flagship product, DefenCath, in 2024. Net income and free cash flow turned positive in 2025 and are projected to continue growing. CorMedix fiscal 2025 financial forecast. Looking ahead, analysts project 2025 revenue of $217.01 million, representing a 399.19% increase from 2024's $43.47 million, while EPS is forecasted to reach $1.56, a staggering 620% improvement from the 30 cents loss in 2024. Reflecting this strong growth outlook, analysts maintain a buy rating on the stock, setting a price target of $20, implying a 47.93% upside potential, with the highest target at $23, representing a possible 70.12% upside from current levels. CRMD stock price performance and valuation. At the time this video was created, the stock was trading at $13.52 per share. CorMedix stock has delivered an outstanding stock price performance, representing an impressive 169.3% gain compared to the previous year. This remarkable growth has significantly outperformed the S&P 500, which rose only 14.2% in the same period. Looking at a longer horizon, over the past 5 years, CRMD has surged 167.7%, once again beating the broader S&P 500's 87.9% gain, demonstrating the company's strong momentum and sustained investor confidence. Despite this sharp rally, the stock's valuation remains attractive relative to its growth prospects. The company's current price-to-sales (PS) ratio stands at 6.81 on a trailing 12-month TTM basis, while the forward PS is projected to decline to 4.49. Its PE ratio is 17.13, while the stock boasts a compelling forward PE ratio of just 8.39. Additionally, the PFCF price-to-free cash flow (TTM) is 33.19. Considering the company's rapid earnings growth, expanding margins, and robust revenue outlook, CRMD's current valuation remains very low, especially when we look at the PE valuation, making it an attractive opportunity for value investors seeking both growth and upside potential. CorMedix growth potential. CorMedix growth prospect remains strong, driven by several factors. 1. Exceptional commercial success of DefenCath driving revenue acceleration. CorMedix's flagship product, DefenCath, demonstrated remarkable commercial success, with Q2 2025 revenue soaring to $39.7 million from just $0.8 million in Q2 2024, an unprecedented growth of nearly 5,000%. DefenCath is the first and only FDA-approved antimicrobial catheter lock solution aimed at reducing catheter-related bloodstream infections, CRBSIs, in hemodialysis patients, a critical issue impacting up to 250,000 U.S. patients annually. Its clinical efficacy, evidenced by a 71% reduction in CRBSI risk in Phase 3 trials, has driven strong adoption in both inpatient and outpatient dialysis settings. A key partnership with a large dialysis organization, LDO, has recently accelerated this uptake, expanding patient treatment targets by at least 50%. This collaboration is expected to reach an annualized run rate of 6,000 patients by year-end 2025. Reflecting this momentum, management raised full-year 2025 revenue guidance to between $305 and $335 million, underscoring confidence in DefenCath growth potential. 2. Transformational Melinta Therapeutics acquisition expanding portfolio and market reach. The $300 million acquisition of Melinta Therapeutics is a transformative move that significantly expands CorMedix's portfolio and market reach. This deal adds 7 innovative drug products like Rezzayo, Minocin, Vabomere, Orbactive, Baxdela, Kimirsa, and Toprol XL, are diversifying revenue beyond DefenCath. Melinta's strong commercial infrastructure and experienced acute care team provide CorMedix with immediate access to a broader customer base and distribution network. Management projects the acquisition to be highly accretive, with double-digit EPS growth expected in 2026 and annual synergies of between $35 and $45 million. Melinta contributed about $120 million in 2024 revenue and expects between $125 and $135 million in 2025, creating a stable revenue foundation. The combined 2025 revenue guidance of between $305 and $335 million reflects significant growth, positioning CorMedix as a major player in infectious disease and acute care. Rezzayo Phase 3 study could unlock peak sales above $200 million. 3. Significant pipeline expansion opportunities and market diversification potential. CorMedix is well positioned to expand DefenCath market beyond hemodialysis into several high-value therapeutic areas, unlocking significant additional revenue. The company has launched a Phase 3 trial evaluating DefenCath for total parenteral nutrition (TPN) patients, a market that could generate between $150 and $200 million in peak annual sales if approved. TPN patients face similar catheter infection risks but lack effective prevention options. CorMedix is also exploring DefenCath use in oncology patients with central venous catheters, targeting an estimated 150 million catheter locks annually in the U.S. Their regulatory strategy includes pediatric indications to further expand reach and exclusivity. Additionally, the Melinta acquisition adds established drugs with growth potential, including BARDA-funded programs for Baxdela and Vabomere in pediatric and biodefense fields. This diverse pipeline offers multiple growth opportunities, reducing reliance on any one product and maximizing market potential. Risks to consider. While CorMedix is growing fast, we should be mindful of potential risks. 1. Reliance on a single product. CorMedix's revenue hinges on DefenCath, the sole FDA-approved catheter lock solution for CRBSI, posing risks if regulatory issues, clinical setbacks, or competition from antimicrobial alternatives arise. The planned Melinta Therapeutics acquisition seeks to diversify its portfolio, but integration challenges and costs could strain resources. This single product reliance underscores vulnerability, as failure to maintain DefenCath market share or navigate acquisition risks may hinder growth, despite CorMedix's strong cash position and promising outlook. 2. Limited market potential and adoption challenges. DefenCath reduces catheter-related bloodstream infections by 71%, but its market is limited to dialysis patients with central venous catheters, constraining long-term adoption and revenue growth. Failure to secure contracts with major providers like DaVita or expand into markets like pediatric or total parenteral nutrition could stall growth. This niche focus risks CorMedix's scalability, as broader market penetration is critical to sustaining revenue and capitalizing on DefenCath clinical success. 3. Reimbursement and pricing pressures. DefenCath leverages temporary reimbursement programs like NTAP for hospitals and TDAPA for outpatient clinics. However, Medicare's planned shift from per-dose TDAPA to a volume-based model may lower the average selling price, hurting profitability. The expiration of these reimbursements could further erode margins and pricing power, particularly if competitors introduce cheaper alternatives like heparin locks, threatening CorMedix's financial stability and market position despite DefenCath clinical efficacy. Conclusion: CorMedix has demonstrated remarkable growth, driven by the successful commercialization of DefenCath and exceptional Q2 2025 results. With soaring revenue, strong profitability, zero debt, and impressive analyst forecasts projecting significant earnings expansion, the company remains well-positioned for continued success. Despite its sharp stock price rally, CorMedix valuation is still attractive, supported by a low forward PE and strong growth prospects. For investors seeking high-growth opportunities with solid fundamentals, CorMedix presents a compelling long-term buy. But remember, this is not a financial advice. What do you think about CorMedix? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.